In trading, there are two schools of thought, two extremes that coexist like opposite poles of the same magnet. One school believes stop losses are armor, the only shield that keeps you alive in the chaos of the markets. To them, every small loss cut early is a bullet dodged. And the other camp? They believe in endurance. They place the trade and let the market decide its fate. No stop loss. No lines in the sand. No breaks. They argue that stop losses only get you wicked out before the real move even begins. One side chooses discipline, the other chooses absolute freedom. What's interesting is, both have their logic. Both have moments where they look at the market and feel completely validated. And both have moments when the market turns on them and forces them to question their own philosophy. The question isn't, who's right? The real question is, who survives longer? And that's exactly what we're about to break down. Right now, when you first step into the market, the thing you notice isn't the red and green candles. It's the brutality. The market doesn't care whether you love stop losses or despise them. It cares about one thing only, whether you have enough blood left to stay in the game. And this is exactly where both schools of thought begin to reveal the fatal flaw most traders never dare to confront. The stop-loss believers treat discipline as their only lifeline in the chaos. But they never admit that sometimes that very discipline becomes a pair of handcuffs, locking them into back-to-back losses. They cut correctly, they cut logically, they cut according to plan. Yet their account still erodes day after day. They never say it out loud, but in the back of their minds, there's always that chilling whisper. What if I hadn't used a stop-loss this time? Would this trade have come back and saved me? That doubt forces them into a daily battle, not with the market, but with their own system. Meanwhile, the no stop-loss crowd walks into the market with a belief that time will always side with them. They believe in recovery. They believe price always comes back. They believe the market will always give them a way out. But they never admit the truth. They aren't trading with knowledge. They're trading with hope. They survive a few drops. They escape a few crashes. They feel vindicated. Right up until the day the market opens with a violent gap, a flash crash, or an irrational spike that wipes out their account in minutes. Only then do they realize that endurance wasn't a philosophy. It was just a gambler clinging to luck. The cruelest part is that the market rewards both sides, but takes far more than it gives. It grants the disciplined traders perfectly logical stop-outs, only to crush them later with a long losing streak. It grants the no stop-loss traders miraculous recoveries, only to inject them with the illusion of invincibility before delivering the fatal blow. Everyone is right, until they're wrong. And when they're wrong, the bill is always far more expensive than they expected. Both schools commit the same sin. They believe in certainty in a place where certainty does not exist. Stop-loss traders believe risk can be fixed. No stop-loss traders believe the market will always come back. But Wall Street has a line that every long-term survivor knows by heart. The market doesn't owe you anything. It simply waits for its chance to take whatever you have left. The real question is never, should I use a stop-loss? The real question is, do you understand the price of each choice? Do you know how much you're willing to pay to keep your philosophy alive? Do you know when your own philosophy will turn on you? This isn't a war between two camps. This is a war between you and the illusions you create to feel safer when you hit the place order button. And once you see that, you'll realize a chilling truth. The right philosophy isn't the one that wins sometimes. It's the one that can take the market's hardest punch and still remain standing. The market doesn't choose the smartest. It chooses the survivors. And survival doesn't come from blind faith in any doctrine. It comes from the ability to stare truth in the face, no matter how brutal it is. If you want to last in this game, you don't need a philosophy. You need the truth. And that's exactly what we're about to dive into, right now. Let me tell you about David. From the outside, he looked like someone born for the market, cold, composed, emotionless. A trader so sharp that even the guys on Wall Street would nod and say, yeah, that one has the talent. But the market doesn't care about talent. It cares about psychology, especially the smallest crack inside a trader's mind. David started his trading career with something most beginners don't have: iron discipline. Every position he entered had a stop loss. He followed his rules like a machine. Wrong trade? Cut it. Right trade? let it run. And as you'd expect, his account grew slowly but steadily. Others had explosive gains followed by catastrophic collapses. David just kept climbing, step by step, a rising star, until the day the market decided to test how strong David really was. It was an ordinary autumn morning. No news, no major events, no unusual volatility. David entered a long position on a stock he'd studied for a month, a flawless setup, everything aligned. He set a 5% stop loss, wider than usual, deliberately, because he trusted this trade deeply. But 2 hours later, the price suddenly tanked. No bad news, no explanation, no reason. Just the market doing what it does best, destroy confidence without warning. His stop loss triggered. He took a 5% loss. Annoying, but manageable. It's just one losing trade, he told himself. But then the stock bounced. Hard. Exactly as he had predicted, exactly as his analysis called for. And if he hadn't set that stop loss, he would have bagged a huge win. Do you know what happens inside a trader's mind at that moment? It's not regret over the money. It's not regret over the missed profit. It's self-doubt. And that's when the market slips into a trader's psyche and carves out a tiny crack he never notices. David began to wonder, am I being too rigid? Did my stop loss cost me this move? Should I give my trades more breathing room? One small, harmless loss had made an exceptional trader question the very discipline that kept him alive for years. A trader's downfall never begins with a big loss. It begins with a small thought. And that was the day David decided to try something he had never done before. Enter a trade without a stop loss. Just once. Just to feel it. Just to see if his rigidity had been holding him back. That's human nature. When people become good at something, they feel they've earned the right to break the rules. Not because they're stupid, but because they believe they've become experienced enough to survive. That day, David entered a long position on a stock sitting at a bottom, a beautiful setup. This time, he told himself, I'll let the market decide. You already know where this is going. The market dipped a bit more. David stayed calm. It'll bounce. It didn't. It's just retesting support. Support broke. It'll come back. It didn't. It fell harder. David felt his heartbeat accelerate. Logic began to shake. His hands turned cold. But he still didn't cut. He couldn't, because cutting meant admitting he was wrong. And this was the first trade he entered without a stop loss. The one he had convinced himself he was absolutely right about. In trading, the moment you're certain you're right is the moment the market proves you most wrong. The stock kept falling. 10%, 15%, 20%. David started clinging to everything. Analysis, news, PE ratios, earnings, expert opinions. All of it just to hide one truth. He was trading on hope. Traders don't blow up because they lose money. They blow up because they hope. At my 30%, David finally panicked. His account bent under the pressure. But the mind always finds an excuse to delay pain. He thought, it's too late to cut now. That sentence is the most dangerous thought any trader has ever whispered to themselves. Too late to cut. Too late to admit I was stupid. Too late because the pain is too big. And when you're too afraid to cut because it hurts, you accept something far more painful, letting the market decide your fate. The final collapse came in a boring afternoon session. No drama, no bad headlines, just a cold, steady stream of sell orders, as precise as a surgeon's scalpel. And David's account hit the liquidation threshold. Everything was closed automatically. Everything ended in seconds. David sat in his room afterward. No charts, no screens, no trading. Just staring at his own hands, asking himself, how did one tiny decision destroy me? I can tell you the answer. It wasn't that decision. It was the wound left by the previous loss. That stop loss that triggered too early cracked his confidence. And when a trader loses confidence in his discipline, he stops being a trader. He becomes a gambler pretending to be rational. Most traders don't lose because they lack knowledge. They lose because they can't handle the pain of the truth. The market isn't fair. Sometimes you do everything right and still get stopped out. Stop losses aren't designed to help you win. They're designed to keep you alive. You're not as strong as you think. And a tiny crack in your psychology becomes a bottomless pit when the storm hits. And the biggest truth of all, a no stop loss trade only becomes deadly because it works too many times before it fails once. It isn't just David. I've seen it happen countless times. I've seen traders cut losses correctly for 3 straight years, only to skip one stop loss and lose all 3 years of discipline in a single afternoon. I've seen traders with solid systems abandon them because one time the market bounced right after hitting their stop. And from that moment on, they lost their entire identity. I've seen people smarter than me, better analysts than me, more disciplined than me. But with one psychological shake, they lost everything. Trading isn't a game of intelligence. Trading is a game of pain tolerance. The pain of being wrong, the pain of repeated losses, the pain of the market mocking you, the pain of watching others win while you lose, the pain of cutting a position knowing it will bounce right after. If you can't bear that pain, you will always find excuses to avoid it. And the easiest excuse is to remove the stop loss, but that is also the quickest way to kill yourself. David didn't lose because he lacked skill. He lost because he let emotion slip in at the worst possible moment. And that's the one thing every trader fears but never admits. We don't lose because of the market. We lose because of ourselves. And the tragedy of every trader is this. We all know it. We just never believe it will happen to us. Until the day it does. No matter what school of thought you follow, the market only cares about one thing in the end. Can you survive? Every philosophy humans create, every sharp argument, every ounce of confidence or arrogance a trader carries, all of it is only valid as long as their account still has enough blood left to stay in the game. If not, every theory becomes scrap metal. You can believe in the stop loss as a shield. You can also hate it like a shackle restricting your freedom. But the market has never cared about your beliefs. It tests you with two things, time and volatility. And the frightening part is that it always wins, because it never gets tired, never gets emotional, never regrets. But you do. If you think the market needs you, that's an illusion. It doesn't care where you come from, who you learned from, or what system you follow. Whether you place a stop loss or not, the market won't even blink. It can shatter your strongest convictions. It can make you doubt the very philosophy you once thought was truth. Not because you're weak, but because the market is stronger than you think. An older trader once told me, no matter what style you follow, remember this, in trading, the survivors aren't the ones who are right, they're the ones who can endure. It sounds simple, but the longer you spend in the arena, the heavier that sentence becomes, because you will never fully understand its meaning until you watch your own account fall from hope into despair, from confidence into helplessness. Those who follow the stop-loss school understand discipline deeply, but they carry their own wounds. Being stopped out right before the trend begins, being kicked out of positions moments before the breakout, feeling like they're always one step off. It's a quiet, subtle kind of pain, the feeling of being mocked by the market, the feeling of always being pushed out right before the party starts. And it slowly makes them question the very rules they've sworn to follow. On the other hand, traders who refuse to use stop losses carry a different pain, deeper, quieter, and far more brutal. The pain of delay. They refuse to cut losses because they believe the market will bounce. But every minute, every second, they watch their account bleed out. At first, it's a scratch, then a cut, then a wound, then a hole, and eventually a rupture that can't be sealed anymore. They don't lose because of one bad trade. They lose because they refuse to accept they're losing. Two schools, two psychologies, one shared fear, losing money. Whether disciplined or free, defensive or tolerant of pain, you are still driven by that fear. And the market knows. It attacks exactly where you're weakest. It lifts you up, drops you down, gives you hope, and erases it in a blink. It doesn't attack your strategy. It attacks your psychology, the weakness you try so hard to hide. Andre Castellani once said, in the markets, the patient win, the impatient lose. But patience doesn't mean holding a losing position forever. Patience means being patient with the right method, not with the wrong one. And Jesse Livermore said, the market is never wrong. Opinions often are. Every trader must carve that sentence into their mind until it hurts. When you place a stop loss, you accept that you might be wrong. The pain there is the pain of the ego. But when you refuse to place a stop loss, the pain you feel is the pain of your account. One pain is emotional. The other is financial. And in the end, the price you pay is always proportional to where you're weakest. Now look back at your own years of trading. How many times did you lose because the market wicked you out? How many times did you lose because you didn't cut? How many times did you know you needed to exit, yet stood there watching until it was too late? How many times did you say, just a bit more? It'll bounce. It can't drop any further. And then the market answered with a deeper stab. There is no perfect school of thought, but there are unbreakable laws. 1. The market can always go further than you think. 2. Your account cannot survive too many further than you think moves. 3. A long-lived trader isn't the one who wins often, but the one who loses within limits. Richard Dennis once said, I am always willing to lose small, but I never allow myself to lose big. This isn't a quote you listen to for motivation. It's a survival doctrine. You can win slowly, but one uncontrolled loss resets you to zero instantly. In finance, survivors share one trait. They have capital protection rules. Each has their own method, but they all know one truth. If you don't protect capital, you have no future. Whether you belong to the stop-loss camp or the no-stop-loss camp, you must have a line that, when crossed, forces you to act. Henry Kaufman said, markets reward adaptability, not intelligence. Adaptability means knowing what type of trader you are, what your psychology can withstand, and which strategy allows you to stay alive the longest. No one can choose your school for you. The market and your own psychology will choose for you. Some people are born to use stop losses. Some are born to hold wide positions, allocate capital smartly, and stomach volatility. But no one is born to blow up their account. No one is born to be a victim of their own stubbornness. In the end, the only question that matters is, how long can you survive? If you're reading this conclusion, it means you truly care about being a survivor, not a gambler praying for luck. So I want you to do something right now. Comment your school of thought. Are you a stop-loss believer, a no-stop-loss trader, or someone in the middle, carving your own path? Share your perspective. Your story might help another trader avoid a fatal mistake. And if you want to go deeper into the mindset, into the psychology that determines a trader's survival, subscribe to Trading Mindset Lab. Turn on the notifications. Because we're not just learning to trade, we're learning to survive in a ruthless market where only the prepared stand until the end. It doesn't matter which school you choose. What matters is whether you have the discipline to survive within it. And if you're ready to keep going, I'll walk this path with you. Welcome to the real game.